In this video, I'm going to break down my complete NASDAQ 100 trading strategy from A to Z. And the strategy that I'm going to introduce you to, I have actually been using this strategy for over 3 years. I've never changed up my strategy. And I believe by the time you are done watching this video, you're definitely going to have a bunch of new weapons in your arsenal when it comes to entering NASDAQ 100 right when it opens. And if you want to hit some big trades, I'm talking about when you enter on the 1 minute, 2 minute, and even 5 minute chart, you're going to be able to get some insane runners using one of the most simple trending strategies. In fact, it just involves a couple moving averages, and last but not least, some common sense. Now, before we jump in this video so I don't waste your time, let's get to the question. Does this strategy actually work? Because I know when it comes to strategies on YouTube, most so-called Forex gurus absolutely have no idea to trade. They all use the same strategies. Now, how do I know this strategy works? Well, because I've backtested thousands and thousands of candles. I've live streamed for the last 3 years. I put my time into the charts. And by following the strategy in a single trade, I was able to flip $1,000 into over $27,000 trading a crypto named Gala because of the strategy. And ever since I had that $27,000 trade, I hunkered down and I wanted to dial in how could I make this a really good scalping entry system. And what I found out is it's actually easier to get more home run trades than we think. I'm not talking about 1 or 2 Rs. I'm talking about 10, 20, 30, even 50 Rs. Insane numbers. So without any further ado, let's go ahead. I'm going to share my screen and I'm going to break down my trading strategy for NASDAQ 100. Stay tuned. All right, so my trading strategy involves a very simple candlestick pattern called the Kangaroo Tail. Now, I built a custom indicator called the reversals. It lets me know anytime a certain Kangaroo Tail prints. So here is an example of a bearish Kangaroo Tail. As you can tell, it looks just like a shooting star. It could be classified as a doji. But basically a Kangaroo Tail is simply a candle with a very small body and a long wick. And this is a bearish Kangaroo Tail example. For a bullish Kangaroo Tail example, we have one right here, small body at the top with a wick on the bottom. Now, the best way to use these candles is to first make sure they are on support and resistance lines. So for example, right here, if we zoom out for context, this is a trade setup that I saw this morning. I actually did not enter it because it moved so fast. And that's one of the main reasons why I like this strategy, because you can get a very tight stop loss and these candles can just take off. So let's go ahead and scroll out. You can use trend lines, support and resistance. So if we find the highest point here, we can draw a line here and see that there has been a pretty solid trend line going. And then right here, we had this Kangaroo Tail print. Now, the way you would have entered this trade is, if you're quick enough, is you would just simply put a stop loss at the top of this wick as so. And if we check this out, this candle actually dropped about 10 Rs. With the optimal entry spread, you could have gotten maybe 6 or 7 Rs, but if you have smaller spreads and you can enter quickly, you can get about 10 Rs. This is on the 1 minute chart for NASDAQ. So it's about 10 Rs, just a 30-minute trade. Now, this is the trade that I took this morning. We highlight this, we can see clear consolidation. So when this bullish Kangaroo Tail printed, it was actually the lowest point that price had been in a while. So very clear support zone, consolidation. In the way you would have entered this is how I entered. You enter right there and you put a stop loss at the wick or the tail and you would ride this up. So this is actually at about 6:12. So about 18 minutes later, the market opened and I took my profits about 3 or 4 minutes right after the open for a nice 10 Rs. So that was a picture perfect scenario. Now, I'm going to show you an easy strategy you can use. It doesn't matter if you're going to use a Kangaroo Tail strategy, but this is going to help you hold trades longer. So what I'm going to do is I'm going to pull up my indicator called reversals. I'm going to go over here to style. I'm going to turn on the 100 simple moving average. Next, I'm going to enable the 30 exponential moving average. And then I'm going to enable the EMA smoothing for a period of 10. So for example's sake, here's a nice Kangaroo Tail on August 16th, 2022. And the way you would have entered this candle is you simply, again, would have placed the stop loss on top of the wick or above, considering how big your spread is. And this trade dropped about 16 Rs in about 30 minutes again. So if you notice, at this point, price came down and touched the 30 EMA. We have this blue line, which is the EMA smooth for a period of 10. And then the very next candle touches the 100 simple moving average. Now this would be counter trend. One of the ways that you can trade Kangaroo Tails, after they've been trending a little bit on the moving averages, depending how you're feeling, you can take a shot at one of these trades and see if a moving average is going to break. And let me tell you, if these moving averages break, you're going to have a monster trade. You're going to have a monster trade. So in this example, we had a bunch of consolidation in this area of chop chop, market wasn't open, and then price broke out right when the market opened at 6:30 a.m., breaks the moving averages, comes back up and starts trending. Now you might be wondering, what about all these losing trades? Well, if we pay attention, price told us all moving averages broke, retested, so we had a break and retest scenario. Now, since price is trending down, clearly trending down, you would ignore all of these buy signals. Why? Because the trend is your friend. We have a clear moving average crossover, we have a moving average retest, and price drops. So we only want to be looking for sells at this point. So in this example, this is about an hour and a half after the market opens. This bearish Kangaroo Tail prints. So we know we're in a downtrend still. What are we going to do? We're going to enter a sell. And if we're quick enough, we can get an extremely tight stop loss right at the top. And what we're going to do is we can hold this until price comes back over and either breaks the 30 EMA, which is my blue lines, or the 100 simple moving average. So with this setup, you could have gotten about 5 Rs. Maybe more if you notice this triple bottom and you just want to get out, you can get 8 Rs right there. Or you can continue holding. And what this is going to allow you to do is you can hold through consolidation like this. And if it makes new highs or whatnot, then obviously you're going to exit the trade. But let's say you're looking for continuation entries. We have another one right here. So what are we going to do? We're going to enter another sell and we're going to put stops on the wicks. And once again, we're going to hold. We're going to hold until moving average crossover, which we had one right here. And if we notice here, what happened? As we're trending down, we had an additional bearish Kangaroo Tail. So what are we going to do? You would enter a sell on that because why? The moving averages are acting as our support and resistance. And by seeing what happens after the 30 EMA, you still have a barrier of this 100 simple moving average up. So if there's more bearish signals, we're going to enter. But by waiting until price crosses the 100 simple moving average, we can get a bigger chunk of profit out. So if we look here, this is going to allow us to hold longer as long as we're following these rules, which isn't bad. I made about $500 on that trade, holding all day. How was I able to hold all day? Use the moving averages. So if you're a trader who struggles with holding trades longer after your initial entry and you're in good profit, hold up the 100 simple moving average, hold up the 30 EMA, and also show the 10 EMA smooth. Once you do that, you can use those lines and hold. It's really that simple, but emotion makes the trade harder than it is. So I was able to hold all the way from the open until about an hour before the close when I took my profits. So now I want to test you guys. So if we look here, price is under the moving averages, right? What are we going to be looking for right now? What are we going to be looking for right now? Are we going to be taking buys or are we only going to be looking for sells? Here's the situation here. Are we going to take this trade? The answer is no. We're not going to take that trade because we know we're only looking for sells. We're looking for bearish Kangaroo Tails. And if we look here, we are preventing ourselves from losing another 5 or 6 trades. This one pops up. Are you going to take the trade? Absolutely. You're going to take this trade. But what happens? You get stopped, right? You can stop. That's part of trading. But then you get another one. What are you going to do? Well, the trend is your friend. You're going to also take this trade. And this time, what happens, right? This time, let's say you did take all these trades right here. You lost 1, 2, 3, 4, 5. Guess what? You just recouped all those losses. You recouped this sell loss. You're still holding, right? You're still holding. Now, when price does do something like this, let's say price breaks the 100 simple moving average, we get a little bit of fake out action, right? People do some buys, but what you can do here is you can wait like 5 to 10 candles and see what happens after. And by doing that, you're going to be able to hold longer. You're going to take decent profits. And if you keep following the strategy, here we have price breaks the moving averages right here. We're trending up, but then it only takes 3 candles and we are out of those moving average ranges. And then what happens here? We're not going to take this trade. I mean, you can if you want to because it looks like a W setup, but because we're only looking for sells now, those are going to give us the biggest setups. So we prevent 1, 2, 3 losses right there. Now we get a Kangaroo Tail. What are we going to do? We already know we're going to put our stop loss above and we're going to see what happens. We're going to ignore this trade. We're still in the trade. Now we have some decision making here. We can either get out or keep holding. There is another Kangaroo Tail down here. So if you were happy with your profits, you could either wait for that 100 SMA to be broken, or if you got diamond hands, which I know you do, you can keep holding. And I mean, look at how long you can literally hold if you want to wait for both moving averages to finally break. And then here, I mean, my golly, if you follow these trends, if you wait for these Kangaroo Tail alerts, I'm telling you, you're not going to be getting 1 to 2 hour trades. You're going to be having 10, 20, 30, even 50 hour trades sooner than you think. You're not going to have to hold for days. If you get the precise entry on these candles with the trend, do the math, okay? This one alone, this printed at 1 o'clock in the morning if you're East Coast, if you're West Coast time. You get a perfect entry. I mean, look at that. That's 18 hours. You could get out. You can get out right here. That's still a decent trade, right? That is still a phenomenal trade. 10 hours. We keep going. There's another Kangaroo Tail right there. Trend goes, keeps going a little bit. So by this time, you can get a picture of how good these trending. But what about counter trend trades? Well, that is a whole nother entry setup. Let's say you have a time period or a time window of just 2 or 3 hours where you want to enter specific trades, counter trend in hopes that price breaks and tries to start a new trend. So here, if this is in your entry window, let's say you want to enter trades between 3 a.m. and 4 a.m. You're going to enter all 3 of these trades hoping that you're going to get the counter trend crossover, right? Because if you get the counter trend crossover, it's going to be a huge trade and the reward to risk is going to be worth it, because even if you lose 2 or 3 trades, the math is on your side to get that back. So let's say you lose 1, 2, you lose these first 2 trades, you take a buy right here on the bottom, nice consolidation, of course. You're going to see this a lot with Kangaroo Tails, especially on the 1 and 2 minute chart where candles can just stay in the same price range for about 10, 15 minutes. You're going to see a nice wick like this and you're going to take a buy. So with this strategy, if you're wanting to get out after the first initial moving average crossover, you can get 6 hours right there, recovering your 2 losses right here. So if you use the Kangaroo Tail strategy, you're going to have to take some losses, but when you get those big runners, you're going to more than make up for what you lost. Now, if you want to make it simpler on yourself, you can go ahead and purchase my indicator called the Reversals. It's a complete trading system. I spent well over $5,000 programming this. In fact, I even learned how to program some of my own stuff, but it comes with all the bells and whistles, entry lines, stop loss lines. You can add extra filters, RSI overbought, oversold. You can adjust the body size of each Kangaroo Tail. So if you want specific shooting star candles, specific hammer candles, you can do that. If you want to lower the body percent and create specific dojis, you can also do that. The cool thing is different emojis will pop up on the chart regarding different criteria. For example, if you see the exploding purple emoji, that signifies that there is divergence on the EFI force index, which is an oscillator, and there's also a high volume spike compared to the last 3 candles. And that's what this setting is for right here, show ultra Kangaroo Tails, and you can choose the volume percent required to make that an ultra Kangaroo Tail. For the Rocket Super Kangaroo Tails, these are just signifying it is a Kangaroo Tail with divergence on the force index. So there's no high volume spike. It's just a Kangaroo Tail with divergence. And these ones actually move a lot, okay? You can see this rocket just shot straight down. Again here, this rocket shot straight down. So if you want to check out this indicator, check out the link in the video description, kangaroofx.com. This indicator is $49 a month. If you want to take it for a spin, go for it. If you want to see me trade this live, make sure you check out my live streams. I stream a few days a week, Monday to Friday from 6:30 a.m. Pacific, and I'm on for a couple hours. But if you got any value out of this, go ahead and give me a like. If you got any questions, feel free to email me, leave some comments down below. And with that said, thank you for spending time and watching my video, and I hope to see you in my future ones. Have a good one.